this is tea falling into the sea. How's everyone doing? TGIF, Patrick, Ziggy, Zia. Who else is in the house? Tina, how are you? Nice to meet you. Stephen Marshall, Simon Dyke. Everyone doing okay? Hope everyone had a good week. Thomas, Steve F, Susie. Is ForexAnalytix good or what? Hi, Michael Bergman, Michael Wagner. So people I interview hang out here. Did you discover this place? See you, Bosh. Nice to meet you. Thank you. So I know no one in Faye should have gotten caught long the crude, and our subscribers. Andre was first at 71. He got in there. Then on Tuesday, at the end of the session, I said sell a rally to 72.80, $1 stop. I was looking for 70.40, which was the off number. And then Greg came on Wednesday with the bearish view. I said after the first day, if you didn't sell the top, you weren't late. Sell any rebounds. There was a, tiny little rebound after the initial break right here. Not much of a rebound. Maybe it just held. Okay, so basically now you have a reversal week. In fact, it's an outside week, pretty negative signal. So I think that retest of these highs is pretty likely in the coming weeks. Anyway, hope that saved you some pain from being long the oil market and made your balance sheet look a little better this week. Hi, Dave. How are you? Okay, so now let's move over to the dollar that won't die. Another great week. I tried to ask Greg if his count for 107 was back on, because it is a weekly breakout. Although there have been a couple of trades, right? There was this trade, said cover dollar shorts here. Then we had this new high when I was talking to Jared. Yeah, Jared interrupted him during his webinar, said maybe this is it. I think it was at this candle. And we had a pullback. Then yesterday I tweeted, I said, you know what? It looks like we only have a 2. So new highs coming in the dollar. It's not confirming. Well, we don't know yet, but this reading was above 70. So I think there's some potential shorts, but I just keep looking at this breakout. And as long as we're holding this green line, anything can happen. If I just go back to Edwards and McGee, classic technical analysis, and I define this as a falling wedge, and the rule is that wedges can retrace 100%, maybe we're just going to keep going. Down here, 94 seemed like quite a tall order, and here we are. But shorter term, I think there's going to be a scalp setting up next week for at least a pullback to 93. So that's what I'll be stalking next week. Okay, I'd say the other great trades were people who got long the precious metals and short the yen. I think there's going to be an opportunity to short the yen. In fact, the yen is, acting US dollar yen compared to the dollar. Dollar had a good week. This is a pretty negative week in the yen. Very dramatic down week. Andre showed something where we should get some support down here, right around this 109 level. And next week, with the dollar making new highs, if it makes new highs, I'd be looking for shorts up here. So the dollar, I'm looking for a trip back to the return line, right? I want to see that. And the yen, which has taken it out, I'm looking for a rally 2 for short positions there. So that's what I'm looking at going home over the weekend, long weekend. We will be closed on Monday. Friday is always a great day to subscribe to ForexAnalytix, you know, at least take the trial. I tweeted it, so I'll say it here too. If you haven't tried us out for $1 for 10 days, if you feel you were scammed, yeah, Dan, if you feel the dollar was not worth it, let me know. I'll refund it to you personally. All right, I'll wire it to you. Oh no, the wire charge will be more than the refund. We'll go snail.
Wire charge is like $25. Are you crazy?
Yeah, I'll have to do.
I'll PayPal it to you.
Oh yeah, there you go. Great.
Snail mail.
Great idea. And you know what? On this weekend, Blake, I know it's not Veterans Day, it's Memorial Day. I know it's probably close to your heart. I'd like to thank you for your service, to having the courage or being dumb enough to join the Marines when you were a young guy.
That would be dumb enough, but thank you.
Okay, and you know what? More importantly, that you came home safe and sound and were able to have a trading career that has helped hundreds of people over the years. So I want to tip my hat to you for your service, and anyone else in our community. I know that Mike Wagner is a Marine. He was disabled as a Marine, and so anyone out there that had the courage to serve.
Who's Mike Wagner?
He's in the room. He's a subscriber, and
I
know him.
I didn't know that.
Yeah.
If he's listening in, hey, a devil dog. All right.
Anyway, so we'll be closed Monday. So subscribing it's a great time to subscribe. Also a great time to get a hold of Trent and his partner at Forest Park FX and solve your brokerage problems if you have any, because I don't think it's going to be a slow summer, you know, where we get into the dog days. I think it's going to be pretty active with all the geo stuff and Fed and everything on the agenda. So again, thank you, Blake.
Thank you, Dale. You know, I tweeted a picture of my my Marine buddies yesterday. We were friends since childhood, and we all joined the Marine Corps together. And wow. Yeah, those are so they live in Arizona. Yeah, it's one of the benefits of me moving back to Arizona. Here, I'll show you guys really quick. These guys we all met in junior high school, actually when we were 13 years old, and so about my oldest son's age. Yeah, right. So this is a picture of us yesterday. We went and had lunch really fast. I had to go pick up my kids early. They were getting out of their last day of school. Actually, today's technically their last day of school, but today is more of a fun day for my kids. Anyway, these guys, we all joined the Marine Corps together. We spent. Well, actually, let me remove that. Let me see here. Let me give you a different pen color. This dude right here on the far right, he was an aviation navigator. He did celestial navigation in C-130s. We met up in Guam. He flew into Guam, and I took him out and partied so hard that he almost messed up his flight plan going to a small little island out in the Pacific, and they almost ran out of gas because I took him out way too late, till like 5 in the morning. This guy right here is he's a tank driver, and he is he looks like a badass between the three of you. He is. He's actually he's a boxer, and he does marathons, and he's really one of those people that you look at him and you're like, he's genetically like somehow tweaked where he's in amazing shape all the time, and he eats like a horse and drinks beer like a fish. And but we met each other once in Africa by happenstance. After I just saw him like a week earlier in Phoenix, we ended up meeting. Well, it was actually about 2 weeks later in Somalia. We also spent my 21st birthday together in Japan. He was on MP duty out there while I was out there. So I've spent time with these two guys in different countries over the years, and we play golf. Usually, whenever I show you a golf picture, I'm playing golf with these guys. So that's even though we live in different parts of town, we all live about 45 minutes away from each other in different parts of the Phoenix area. We all are we try to get together as like I'll have one of my buddy and his kids over here in a few weeks. They'll come over for a barbecue, and the wives will hang out, and they'll end up staying the night, that type of thing. So
it's interesting, Blake. They talk about guys that meet or share battle together are like, I love watching the military channel, and how they bond in their family, and there's no one closer. You even knew these guys before you bonded as Marines. Really interesting story.
That's right. We have, and so we are like brothers, because actually neither one of us have we have siblings, but none of us have actual brothers. So those are my I would quantify them as my brothers. Who
said blood's thicker than water, buddy?
Yeah, what's that?
Who says blood is thicker than water?
These are guys that would lay their life on the line for me, and I would do the same for them any day of the week. So, those are the kind of friendships that you can't buy those friendships. Those are the ones that you have for years. Anyway, enough about that. I was happy I got to meet up with them for just an hour, even though it was very, very short term yesterday. But I was just on my way to pick up the kids, and we all happened to be in the same part of town at the same time, so we all met up for a salad. I had to eat a salad yesterday because I'm going to be at the beach next week. Just so you guys know, I'm going to be on vacation, and for some of you might take that as a little bit of a tell. But I'll be on vacation next week, and next week I go on a seafood diet. So, right, seafood, and I eat it. So that's a joke from somebody in our chat room, actually, believe it or not, and it's a bad one. All right, let's talk about what's happening in the markets. The euro dollar came under pressure. We hit new highs. I was sitting all high and mighty this morning when we hit new highs, but there's a Spanish no confidence vote, and that might take place, and the euro turned around and hit new lows. It did worry me a bit, to a point where I got out of my euro dollar. I don't want to mess with the euro long. The only way I'm going to do it now at this point is if, let me get this here. Only time I'm going to mess with the euro dollar is if it gets back above 117.50. And then I might consider it, and it has to be under the right situation, meaning that there has to be, something that takes place that tells me I can be long the euro, like some sort of macro news that signals that. But right now, I do not want to be long the euro at this point in time. It's it's the failure up here. If things go the way they are today, we're going to close below the 38% retracement, and that's a scary thing to me. It really is. Now, there's a few other major developments right now, and I tried to play the pound on the long side. Actually, I'd be flat right now if I just stayed in it. But when the euro came under pressure, I sold out my pound just for a few pip loss. So I took a little bit of a loss in my euro, like a 30 pip loss. I took a little bit of a loss in the cable, because really the thing that worries me the most right now is the 10-year yield. Look at the yield. We're breaking yesterday's lows in yields, and if you look at the bond market is testing these highs. And if the bond market breaks out, guys, Dale and I have been talking about this for the last 2 weeks, and Dale pegged it perfectly that we could see a really, really big move in the bond market and a drop in yields. And if that happens, you know, what coincides with that type of movement, you know, if bonds really start to squeeze here, I think that the equity markets are pretty complacent. You notice the S&P is not too far off this key resistance here, and I think the risk is that the stock market actually starts to roll over, and if it starts to roll over, the bond market's going to catch a bid, and yields. I mean, yields are hitting lows right now as we speak. You look at the 10-year yield. You know, we're just ticking into new lows. I mean, that's a genuine concern for anybody who's short the bond market. You got yields that are dropping, and then you have to. With that being said, you got to look at this dollar yen. The dollar yen, it hasn't really started to sell off yet, but we're really close to 38% retracement. But remember, we have a descending wedge breakdown. So the dollar yen, in my opinion, is poised for a move below 109 at this point, especially if bonds continue to rally the way they are. So, you know, I think that is the near-term risk of the market, and it can have a really big effect on the currency market as well. Hold on really fast. Okay, let's take a look at the Aussie. Aussie's just kind of floundering around. Kiwi's just kind of floundering around too. The dollar Canadian has spiked up out of this range. We broke above that 129.25 level. You know, if we break 130, we could see a pretty big move in the dollar Canadian. And one of the things that's weighing on the Canadian right now is take a look at the Canadian yen. The Canadian yen is in breakdown territory. Matter of fact, last night we came back and retested the underside of this trend line and failed. So, you know, you got the Canadian yen breaking down. That's Canadian dollars just weak in general. And then, you know, throw in the idea that the NAFTA's, you know, deal's probably not going to happen. Then you got, you know, trade war with sorry, hold on. You guys have to see this. This is funny. Dave in our chat room, he just posted this. This is hilarious. I'm sorry, Dave. I'm laughing because this is so funny. Dave says until my trading improves. He's got a paper Rolex, paper coffee, Starbucks, paper Mercedes. That's funny. I'm sorry. You know, the guys and gals in the chat room, and I tell you, I enjoy each and every one of you guys that are in there. We really have a lot of fun. We laugh, we joke, we trade, we share ideas. It's a real fun community in there. Everybody in there, for the most part, you know, it's like we just joke around quite a bit. And obviously there's a lot of seriousness too when we're trading, but sometimes you get comments like that I can't help but laugh my ass off. Funny stuff, Dave. Funny stuff. Anyway, that was very, very, very good. What else? Oh, so I was talking about the Canadian yen. So with the Canadian yen breaking down, and like I said, NAFTA kind of going out the door, you know, you're putting a 25% tax on other cars that are coming from outside of the U.S. You know, and I want to clarify something. What I would like clarified, and maybe one of you guys have this information because I just haven't taken the time to do all the homework as far as this proposal for a 25% tax on vehicles. Are they coming? Is it coming out of from outside of the U.S. or because you know so many manufacturers and Stelios, you might be able to chime in on this. I don't know if you're around, but so many cars are manufactured in the United States now that were that are German companies or Japanese companies or Korean companies, but they're manufactured here, right here in the United States. So I wonder if those qualify for the hefty taxation that the Trump administration is proposing. Stelios, is that you?
Blake, yeah. I mean, I actually have to research this because I'm not 100% sure, but I remember seeing a chart of cars manufactured in the US and being exported, and like out of the top 10, it was 6 or 7 were German cars. So, a lot of cars, like you said, are built in the US and then exported to various other markets, which is interesting. But I'm gonna have a read about these proposed what is it, a 25% tax on them. I'm not 100% sure of the details, so I have to check up on them before I have an opinion.
Yeah, because if I mean, there are a lot of cars that are just manufactured here. They're assembled here. So I don't know if that qualifies. You know what I mean? And you know what would really kill the industry? I'll tell you what, Stelios, is that if they start taxing all the parts that come in, because okay, I made a comment on Twitter the other day when Donald Trump proposed this. Back for us here in the United States, back in the 70s and 80s, man, if somebody had a BMW or a Mercedes, you were like, oh, they're rich. It's almost like the equivalent of having a Bentley today. You're a wealthy person. Now, over the because of WTO rules and everything else, I mean, you can buy a Mercedes or a BMW, or you have been able to up until now, for about the same price as a U.S. manufactured vehicle. Not too far off. I mean, you pay a little bit more of a premium for German engineering, or but Japanese cars and U.S. cars are all pretty much the same price. Yeah, you could even argue that some of the American cars are more expensive than the Japanese cars, but there's so many different vehicles in the United States over the last 25 years, and everybody's got a BMW, everybody's got a Mercedes. They're a dime a dozen. How about the parts? Where does that come in? I mean, because if they start taxing like the parts to those vehicles, I mean, that's going to really turn the auto and the used market upside down. It would be crazy. I don't even know what to think about that.
Blake, actually, our friend Nick says something very interesting, that Reagan did the same thing on imported Japanese cars some decades ago. And what did the Japanese do? They moved the factories to the US and they built them there. So that brings direct competition to US car makers, and actually it's eventually turns out to be bad for the US car industry. So this is interesting how it's going to be, how it's going to all be framed, because if it's something that's built in the US or if it's a non-US brand, so I have to see.
So really to make a difference, then it would have to be taxation on just non-US brands. Like if you're that's a Kia and that's a Korean company, no matter if it was manufactured in Alabama, you're getting taxed. I mean,
yes, absolutely right. Although Trump does want to bring more jobs to the US, so if a Japanese manufacturer or a Korean manufacturer brings a new factory to the US to build the cars there, that's good for the workforce. So it depends on how they want to play it. So,
yeah, and actually, I think if I'm not mistaken, that was one of Trump's big pushes back earlier in his early on in his presidency, and that's where he got commitments from, like, was it Samsung or some of the Korean companies as far as committing to build plants here. And maybe that's the case. Maybe that's the case. And if that is the case, then it's not going to have a huge impact on the auto industry. I don't think it would anyway, because so many cars are built here. But I don't know the numbers, and I'm really just kind of talking out of my butt right now, because it's not something that I'm educated on. So
first of all, I think that the Trump administration need to decide what they want to do, and I don't think they've decided that. It's still all just shooting a arrow here, see what happens, see what kind of reaction it has. But at some point, they have to decide what they want to do, and then we can talk about what effect it's going to have.
Yeah. So yeah, I guess that's a good point. Thanks for your input, Stelios, and welcome back, by the way. So, and matter of fact, I'm going to turn over to you guys both here in just a second. One thing I do want to cover before I go is the dollar index is getting really close to that big. This is a big confluence. This is the 38% retracement. I know the euro is already below the 38% retracement, but the dollar index itself is right up here too. Even though I got out of the cable, I was long the cable at 35 here, and then I sold it at 25. I got out of it because the euro was taking an absolute nosedive. I'm like, okay, I need to get out of that. But I can't help to think, what if people don't want to own the euro, what do they want to own? If the dollar does peak today, I would say the yen, because you got yields that are continuing to drop. So you got the yen might still come under buying pressure, which means the dollar yen would fall. I am short the dollar yen. I'm not trying to talk my book. I'm just trying to talk about what if the dollar does reverse, what does pick up some steam, and is it the dollar? Is it the dollar yen falls? And could it be the cable? The pound, although plagued with its own Brexit issues, does the market start turning to the cable as a safe haven type of currency? You can see that the Aussie is already outperforming. I know it's come down, this morning over the last couple hours, and so is the Kiwi. But the question is, do some of those end up performing a little bit better than the euro dollar? If people don't want to own euros and they don't want to own dollars, what do you turn to? Where do you go? And so those are the things that I'm trying to ask myself this morning, and trying to figure out, where the market is going to turn for some safe haven type of trade, especially with the bond market is just, you got yields that are just there. Look at yields hitting lows again. Bonds are really ripping here. So anyway, some food for thought and things to think about. And I'm going to turn over to my colleagues, Stelios and Steve. Steve, welcome back.
Thank you, Blake. It's nice being back.
Hey, I want to mention just before I pass it over to you, we once again, we will not be broadcasting on Monday. It is Memorial Day. It's a big weekend here. It's a long weekend here in the U.S. Also, Forest Park FX, if you guys haven't reached out to them yet, make sure you do so. Steve will put a link in the chat box, where you can get a hold of them. Matter of fact, Steve, on our new beta site, just so you know, that the Skype contact and the email contact is not at the bottom. So that's on our beta site. So
it's higher, mate.
It is?
Yeah. Oh. Quite higher. Just before it will be there. You're in the new site. Yeah. Don't worry about it.
Okay, just want to let you know the Skype contact's not there. So on the beta site. So okay.
I know.
Okay. Well, as long as you know.
Thank you very much. It is on the other one.
All right. Very good.
I'm gonna put the link as you asked.
Sounds good. All right, guys. Good luck for durable goods. I'll catch you all in about a week and a half.
Absolutely.
All right. Thanks, everybody.
Enjoy.
TGIF.
Same to you, mate.
So durable goods in 10 seconds. Expecting plus 0.5 core durable goods plus 0.5% month on month from minus 0.1%.
We're looking at the USD yen, by the way, and then we have quite a lot of things to see.
Coming in plus 0.9. Durable goods order is actually lower than expected, but core
minus
durable goods,
1.7% versus minus 1.3% expected. Yes.
yeah, but core durable goods, which theoretically is a bit more important because it excludes transportation, it's 0.9 versus 0.5 forecast. So with a slightly better revision as well. So overall, probably just on the positive side for the dollar.
Yeah, but anyhow, more or less neutral, I think, and we don't see the dollar reacting one way or another. I don't think this is going to be a market mover. Greg, welcome.
Hey,
I see that you just joined in. Hey,
Hey.
how have you been?
I'm fine, and you? Finally home.
I'm good. I'm good. As you know, we were out. We were in Cyprus. I
You
see
arrived today? You arrived today or yesterday?
We arrived yesterday night, actually, with Stelios. Yes, yesterday night.
So you are done.
I see that. Yeah, I see that while we were away, the market actually moved in quite a few instruments that I had indicated, and I know that you were looking at them as well. So perhaps I can show a couple of things and get your opinion. Crude has reversed. I was showing just before I left last week. I was showing that we had an ascending wedge here. I was expecting a break. We got that break. I think that one way or another, we should be getting to lower levels, which is roughly 66 and a half. But you're going to show us if you have some other targets. I mean, in the daily chart, if you see, this is the zone I'm looking for to be the first zone that might provide support. I see that the move is quite strong, so I do expect follow through. Now, on the other hand, we finally got the breakdown that we were expecting in the pound yen. Pound yen has finally penetrated through this ascending trend line support. I was very closely monitoring it. I think that now that we finally push through it, we should see some strong follow through. So I'm giving you here some food for thought and inspiration, actually, to what we should be looking at. And on the other hand, I think that the DXY, by showing some RSI divergence on the daily chart and by going down to the 4-hour chart and seeing here a potential ascending wedge in the same more or less fashion that we had in the crude, I think that it might be getting very close to the point that is also going to be giving us some type of a correction. I also see the cable approaching some critical area of support. I have a horizontal zone marked here. I think that somewhere at the 133, 132.80, 133 area, we might see a reaction and finally seeing a stronger rebound to the upside. On the other hand, I still see consolidations on the S&P, but to be fairly honest, I still think that this consolidation has a little bit of a higher chance of breaking higher than actually reversing lower. So these are, and one more thing I wanted to mention, and then you can show us what you think about it. I'm still short the Euro Aussie. I think it's moving on quite nicely. I do think that those crosses, Euro Aussie, Euro Kiwi, here it is once again going towards the bottom of this channel. Pound Aussie, here it is, and Pound Kiwi. I think that those pairs are really interesting pairs because they do see the potential of pushing even lower. So these are the things that very roughly I was monitoring coming back, and I wanted to mention. So why don't you take over the screen and tell me what you think about my ideas? There you go. I just passed it.
Yes, sure. Okay.
Are we on the same page with most?
Yes, we are. I just don't track those yen crosses, those euro crosses so much. But regarding crude oil and regarding this weak, did you mention weak euro in general? Do you see weak euro in general or just on crosses?
So far, I've refrained from taking a position of the euro against major pairs. I'm just short the euro Aussie because I liked it. I'm now quite a lot actually in the money. Let me check my entry. and I'll tell you immediately. Yeah, I have an entry just above 157 to give you an idea. So I'm roughly 300 pips in the money at the moment. So I liked it, and it's been playing out. I think that it can easily go down to 152. That's my next target, actually.
So actually, what is my thinking here? How I see markets unfolding based on recent developments that we have seen in these 5 days is actually that the main reason why dollar yen is coming down is probably, as you know, because of a turn higher on 10-year US note. So actually, I have been warning and said that potential reversal could occur after these 5 waves down here for a wave 5, which actually probably completed the bigger 5-wave structure. Okay, so we discussed with Blake on Wednesday. I said that minimum 3-wave reversal should occur. We said that firstly we will be looking back towards this wave 4 swing level, but because this current rise is still acting impulsively, it means that it's still only one piece of a 3-wave recovery, minimum 3-wave recovery. So there is even a chance that that 10-year US note will retrace back to 121. Okay, so based on this, dollar yen came to the downside. So you can see that we have seen a very nice aggressive decline here on dollar yen, and clearly, if you will take a look closely, this decline can be counted in 5 waves. So I think that there will be opportunities for even more dollar yen weakness, or on other hand, even more Japanese yen strength against other currencies. However, I see euro dollar at potential support. Okay, so my thinking is that there would be maybe better opportunity to short dollar yen rather than some other yen crosses, because I see those already at some very extended oversold moves. So my primary idea is that I will be shorting dollar yen probably next week after this ABC recovery. I see some nice previous swing low here around 110. It's also a round figure, so I like to trade and watch this as a resistance levels. Also, we have this former swing 4 30 pips higher, and this all comes in around very important 50 and 61.8% retracement levels. Also, keep an eye on this upper channel, which is actually a base channel, resistance lines. So in this area, I would probably be looking for shorts next week while market is trading below these levels. So this dollar yen, as I said, is my primary idea to see weaker prices, and on euro dollar, on the other hand, we may see a potential turn up, because I still think that we are here trading in a 5th wave of decline into some very important 5th levels down there. Also, we have some small wedge here, as you can see.
It's the exact opposite formation of what we're seeing in the DXY at the moment, which isn't a surprise given the fact that it's like 57, 58% of the DXY is the Euro USD, right?
Yes, so you can see why I like dollar yen shorts more than maybe euro yen shorts, because if dollar yen is already showing top, right? So it means the dollar is weak, and euro dollar, it appears to be facing some important supports here. So if we see a turn up on euro dollar, dollar yen could just accelerate to the downside, because dollar would be even weaker now against the others. So maybe it's just dollar yen the leader, what is going to happen on other markets, on other pairs next week. I also see.
Speaking of which, I'm still short the euro yen since a decent amount of time ago, actually.
Yes, almost... it can be a time. It can be time for a pullback, maybe even 200 pips room for a pullback.
Perhaps, although for me it was the 128.50 to 129 area was quite an important horizontal support, and we're finally trading below it. So to be honest, I see what you're talking about, and I totally understand it. I mean, I'm seeing what you're seeing, but I don't want to book because I have already taken profits on half of my short. I don't want to book the other half yet, because it seems like a decent breakdown for now. So I'm comfortable in the money, so I'm going to be holding.
Yes, and definitely this breakdown could extend in 5 waves. Here, even if this is wave C or wave 3, there is room for this equality level to be hit around 125. So there's still quite a nice room for more weakness here. But I would be looking for a pullbacks and also pound yen, which is in a very similar shape, but maybe even better, clearer wave structure. We see 5 waves down. So I have been short pound yen and went out during Asia around this new swing high. Since I can count 5 waves down, I think that this could be coming a new turn in 3 waves higher, because we also see 5 waves down here on the 4-hour. So my idea is that we will see a pullback either from here or maybe after we take out these March lows and then maybe see a pullback. But for me, I think it's a little bit late. But as you said for yourself, if you booked 50% already higher, you just need to leave the market to breathe and maybe catch even more extended waves to the downside, which clearly could happen if we consider that 10-year US notes might have formed a low there, right? Regarding crude oil, as I said, also I absolutely agree with you here. Andre, as you know, took a nice PIP there, right? I think it's still in. Let me check.
Yeah, but I think, honestly, I think that crude has been beautifully played out as a technical formation. I mean, I was looking since like a long time ago. If you remember, we're talking about it. I actually had a target of 71.90 for like a bigger pullback. Of course, you know, the market can never be perfect. We even pushed almost $1 higher from that. But you know, that ascending wedge was so clean, right? So technically beautiful.
There was a third drive at 72.80 that was the turnaround Tuesday candidate I brought up.
Yes, they also
there was even a fractal. The third drive was 3 drives, so it was really beautiful setup.
Yeah, it was beautiful indeed. So what is the question here, Greg?
At 72.80.
What is your target? I told you my target. My target is roughly, let's say,
my target here is for another 10% drop, if not more.
Really? Huh?
Yes.
Yeah. Okay. You know, I take it one step at a time. For me, the first step is towards 66.50.
First evidence why I think that we could see pullback to this level for, let's say, for another 10% or more, is that we have seen here a 5th wave. And normally when a 5-wave cycle completes, we see a retracement back to the area of a former wave 4. Pivot point of this wave 4, or a middle point, if you want, was around 61. Also, this was a wedge. Now, normally when wedge or ending diagonal is finished, the price after a confirmation, which clearly this is confirmation because of decisive break to the downside today. Of course, I still want to see a weekly close price, but if we stay here, then you know that weekly close price, weekly candlestick formation will also be looking bearish if we consider there was a new high, but it will close a lot more lower. So in such case, you would expect price to retrace back to the starting point of this wedge, which again was here at the wave 4. So I would not be surprised to see more weakness here. Also, we have seen, I should update this wave count. Also, we can see clearly very aggressive decline. So it means that this is still only first leg of a minimum 3-wave decline. So based on recent price action, which clearly send out bears below $70 per barrel quite aggressively, which was the first support here. I'm now looking for extension lower to the second support here, which is wave 4. And if we see these levels, then I would still see this as only wave A, B, and then wave C to the downside. So based on this reversal that is happening this week, I think there is room for much lower levels for sure. Okay, so
no, I agree with you.
I'm waiting, we'll be watching pullbacks, but for those who are looking at the FX, I also talked about this with Blake. I said that if crude oil, which was seen breaking to the downside, I said the dollar CAD would probably have no issues to break higher if we consider the dollar CAD was trading quite was trading quite good on the bullish side, despite very bullish crude oil that we have seen over the last few months, few weeks. Dollar CAD was not that bearish. So now when crude oil is turning to the downside, I think that Canadian dollar in general could see very strong decline. So from that perspective, I would be also keep an eye next week on dollar CAD, because I think that there can be new highs coming, especially if we consider that market might have completed wave 2 pullback here on the 4-hour chart. So dollar CAD could possibly next week reach these levels from March highs, which is actually 150 pips away. But as you know, if we are going to see an extension lower, much lower, which I expect on crude oil, I think the dollar CAD could see much more gains here.
Speaking of which, Gregor, because I completely forgot to mention it before, let me give you a chart, so I don't have to switch. I just send you a chart via Skype. This is my view on CAD yen. I haven't touched any of the lines at all. We were discussing about it while it was still consolidating, and I was expecting one more push higher. I think it played out perfectly, and I think that it has now given us confirmation that it's headed a lot lower. What do you think? So far, it played out perfectly.
I think that we are going to see 3 waves of decline, minimum. Again, I would be watching out this pullback here.
Yeah, but I do think that there's more downside coming.
Maybe look for shorts. Even if I take a look on Aussie yen, it's looking actually very nice here. If today would not be Friday, I would probably already had my sell limit orders here in place. But I normally do not like trade on Fridays, especially not with new trades. Okay, so because I spotted this pattern yesterday, I just said that I will wait a little bit more, maybe Sunday night, Monday morning, and then I will see and watch out for a pullback. So it's matching with CAD yen quite nicely. We have seen a turn to the downside. Ideally, this turn is evidence of a completed 3-wave recovery. This, if I go to the smaller time frame chart, clearly was a 5-wave drop. Okay, so I can have this real quick here.
By the way, if you go back to the daily chart on the Aussie yen, because I'm saying that on the daily chart because on the daily chart some of the moves higher are just daily wicks. You can also see that the ABC recovery was almost perfectly channeled as well. That's what I had on my chart. So I think that the rejection that came from, so if you connect the March low with the May low and then draw the parallel, we see that we actually found a high very nicely. So this was more or less a perfect ABC. So I'm 100% with you. I'm also looking lower levels for Aussie yen.
Okay, I'm just want to see where is the resistance here on. Okay, so that would be my first resistance here, and the second resistance probably here at 61.8%. So in general, I think this is the region that I will be watching next week. 83.30 up to 83.60. Stops, of course, in such case would be above the highs. Now you said daily, right? You connect March and
March low.
March low.
The March low, the end of wave 3. Yeah. With the next low, the May low.
You mean the parallel corrective channel line?
Yeah. It was almost perfect, wasn't it?
Yes, of course it was. Yes.
Yeah.
It's normally you recover.
Yeah. So that was a perfect ABC.
Yes, it was. And ideally wave 4 of a leading diagonal. So I'm looking for drop back to 80 actually. Also, I want to bring on DAX. Okay, we also covered with Blake on Wednesday. We also covered DAX. I was a little bit tired, to be honest, of this DAX tracking. I knew that sooner or later we will see a reversal, but it was this fifth wave rise from end of April was much more extended than I thought. And as you can see, it was very similar in distance compared to wave 3, but still.
Don't forget that the high was exactly at the 78.6 as well of the high. So that was also a nice fib level.
Yes, up there.
Yeah, the end of the fifth wave was at the 78.6% fib.
Yes, very nice. So, but actually, I'm still not convinced if this whole recovery is really corrective up as a flat from February lows and that we'll see a break to the downside, or was this first leg of a new bullish rise? But anyhow, in the near term, we should see in both cases 3 waves of decline minimum. So as you know, I'm repeating this always when it comes to trading, that we need to focus on minimum expectations. Okay, and put our trade setup based on minimum expectations for a solid risk reward.
You know, Grega, I know that this is not concrete evidence, but given the price action that we've seen in the FTSE, I tend, I mean, I was saying that since a couple of weeks ago, I tend to be constructive the DAX as well. So my intuition tells me that the pullback is going to be corrective here as well as with the FTSE.
Yes, it can be, but for me, actually, I don't care.
Yeah, I understand what you mean.
I just think that there is opportunities for short because we have impulsive decline, we have a broken trend line support, and what I see is now that wave 2 or wave B is retracing. So I would maybe be watching for this resistance to be seen next week around there.
Yes,
and
there
then
is an
I would be
opportunity.
expecting a drop. Also,
yeah, there is an opportunity to make money being short, even if this ends up being a correction. I'm 100% in agreement with you.
Yes, and also we want to see a reversal back into this area, okay? But if this is really only a temporary pullback, then what you would need to see is that market would find a base after this 3-wave drop at these former swing highs. If we are starting to break these levels aggressively, then I would tend to say that this was a corrective flat formation and that we are going much lower. But in either case, there is room if we get a little bit higher pullback towards 13,050 points or so, there will be room for another 500 point fall. Okay, while we are trading below this highs, I also have this intraday chart here. So 5 waves down, resistance is here, former swing high here in the previous uptrend, and also 50 and 61.8%. Also, so far we have only 1 leg to the upside. For a corrective recovery, we need 3 legs, so watch out for more upside. Once this wave B unfolds, it could complete this short-term pattern at this gap that occurred earlier today. So this was actually close. This was an open price or up there. So watch out for this potential wave B support around what this is, 50 pips, 50 points lower or so. So my idea is to watch out this DAX, watching dollar yen, watching 10-year US notes to stay in uptrend, and at the same time ASEAN. So those are the markets that I'm tracking for next week. Also, crude oil is can be very nice short, but based on very strong decline and current prices that we are trading at, I think that there is not good risk reward set up at the moment. So definitely we want to see a pullback there.
Okay, we have a few questions and we have a few minutes so we can have a look at them. There is a question about metals. I'm guessing I'm guessing gold and silver mostly they're interested for, as usually.
Yes. So if we firstly take a look on gold, I said that now when gold, when actually DAX is coming to the downside, when 10-year US notes are turning higher, we see some kind of a risk of sentiment. So that's why we see gold, money going into the gold. Okay, and what is really interesting to me is that we see gold bouncing from this trendline support and moving quite fastly to the upside, even with euro-dollar trading at the lows. Okay, so my thinking is that gold is doing much better than euro-dollar, but if euro-dollar, as I said, is going to turn higher because we see end of a 5-wave cycle, I think that there will be gold could move even easier to the upside, right? So my thinking is that gold can stay in uptrend here, can stay supportive, while it trades above this trendline support. And also what we can see here is already first impulse up here. So maybe it's wave 3. I would love to see a little bit more extension to the upside to make sure that we are in a wave 3, but definitely this looks very constructive for the bullish trend to continue next week, especially if we will remain and close at these levels or maybe even higher by the end of the day. Okay, so gold, I think it's looking quite interesting. I would probably be looking for gold longs, but this first recovery, as I already talked with Blake, did not convince me when it occurred, okay, because it was not that aggressive, it was quite slow, so I was not enough convinced if the low is in place or not. But now it looks like that we have more and more evidences that we are going to see higher prices.
Between silver and gold, do you prefer gold?
That would probably the best answer would be if you take a look at the gold silver ratio. I can take a look at that.
The gold silver ratio, actually, if you have a very long term at it, looks to be in some type of an ascending wedge, a formation that can end up actually providing a big reversal, but you need to zoom out quite a lot.
I would definitely prefer being long gold rather than silver, and the reason is probably this decline here. But what I like the most is that we spiked here, as I see, to a new low, or tested these lows and turned to the upside quite aggressively, and now we are slowing down. So I think there is a chance for another push to the upside.
Push to the upside, yeah.
Yes, which means that...
And to be honest, silver
but of course, both can move to the upside, silver and gold, but maybe gold in just stronger, sharper manner compared to silver.
And to be honest, silver is stuck in a very long-term triangular consolidation for such a long time that it's, you know, it's, I don't know, it's very tedious to try to trade at the moment. I would want to see a breakout of some kind to get committed with that.
Also, if there are a lot of clients maybe who trade gold and crude oil and those commodities, there's also good to look at gold crude oil ratio. Okay.
Never had a look at it, to be true. That looks like a nice descending wedge breaking to the upside aggressively.
Yes, and actually
there it is.
Yes, and this again looks quite aggressive.
Yeah, it does actually.
So it suggests more upside even after pullback, which means that it confirms the fact that crude oil might be done on the upside, while gold has room for more upside.
That's a good view, actually. Never thought of checking this ratio.
I have actually everything here. I have also gold, just gold against the S&P. I can also take a look at this one. Do we have an interview today?
Dale, do we have an interview today?
Probably not.
No, we don't. We don't.
We don't. Okay,
guys.
Cool.
I Skyped you guys.
Oh, sorry.
Okay.
Oh, okay. So this is gold S&P ratio. So if you see prices falling, which means S&P is probably better investment in gold, right?
Yeah, and to be honest, I don't see something really bullish with this formation yet.
Yes, it's some kind of a consolidation, but
yeah, before it breaks lower, likely.
But what I see is you just need to have some Elliott wave skills. Okay, let me show you. This can be wave 1, wave 2, 3, wave 4 triangle, wave 5 down. 1,
Exactly.
3, 4, 5. A, B, C, D, E.
Yeah. So one more push to the upside and then resuming to the downside. Yeah.
Just to be based on old school approach, don't need to be Elliott wave technician to spot this. So we are consolidating. We are at the lower side of the range. So you would expect price to turn to the upper side of the range. But if you consider also the Elliott wave theory, then you know that this should be a corrective triangle contracting pattern unfolding. Then you need 5 subwaves, A, B, C, D, and wave E is still missing. So it means that if I'm looking to the upside here towards 0.50, it suggests that gold could see more upside while the S&P 500 may face resistance.
In the near term.
In the near term, yes.
Yeah. In the
or let's say maybe for June or something.
Okay, we have another friend asking for your view on Aussie Kiwi.
Aussie Kiwi, okay. We are okay. So what I see here on a weekly chart, I know that Blake was almost shocked when I showed him this chart on Wednesday. Okay, so what I see is bearish impulse unfolding. Here we are again consolidating and could be now in wave E. Now this wave E is some kind of a sharp, but still I would be very careful when we reach this upper trend line resistance. So we are now approaching first resistance here at 61.8. And then you have the wave X swing high, which is also very important potential resistance. But there's also a chance that this is wave A and we'll see wave B, and then wave E will take a little bit longer to unfold. But still, when we reach this upper side of this consolidation, I would be very careful about potential turn to the downside.
So sooner or later, you think that parity is going to be tested or even broken, huh?
On the longer term, if we see a reversal, aggressive one from this upper side of the range, then yes, definitely. If not, then at least pullback will be seen. So which probably matters the most to intraday traders like me and everyone else here. So definitely it's going to be risky to be long up there.
Okay, yeah, we're approaching some important levels of resistance. That's I think more than obvious. Now I have a tougher one for you. Have you had a look at, because we have a friend asking, I was showing it. I think that there is a potential for a reversal higher. I'm seeing here a descending wedge, but we had a long-term triangle. It broke out and then it came back in the middle of the range. I'm talking about platinum XPT USD. I don't know if you had any recent looks on that. I'm actually tracking it. I know that you can. Yeah, as you see, it's quite a tough one. Yeah,
I would probably suggest that we are going to see on the longer term that we are going to see lower prices, but here can be a triangle. Okay, but it can be a little bit more complex. So I think that this is consolidation. This can be wave A. Here was a new low.
I do think that the next move is higher though as well. If you track it in the shorter term, you'll see that this last leg lower has the potential of a good potential of breaking to the upside actually.
Yes, I see. We also price did not manage to make a new swing low, not even close below this trend line. So I mean, if we take a look at subwaves.
Andre is writing on Skype to us that bullish bat pattern is there and bullish divergence. So he likes it to the upside in the near term as well, from what I understand.
So this also supports the idea of potential higher metals, right?
Yeah.
So I would probably be looking here again to the upside for this, for push or rise into wave C. All this.
Okay. We also have questions about the cable, and actually we have two different questions about the cable. Now one is for you. One friend is asking for the cable. Obviously, he wants like a shorter term view, but another friend is asking about your view on the monthly chart of cable. So in essence, he wants a longer term view for the cable.
Sure. Monthly, I think that there's still a chance that we will see a new leg to the downside, especially after this 2 months of very aggressive reversal for around 50% retracement of this previous decline. So my view is bearish here, and also on a daily chart, there was a reversal coming quite aggressive for this trend line support after 7 leg of recovery, ABC x ABC. So this was, in my case, was a corrective recovery, which means I'm looking to the downside. And even if you think that this is only, again, we are at expectations, even if you think that this is only temporary reversal, what I would be looking for is a retracement back to these wave X levels. And this should occur with 3 legs in such case. So I think that this is either wave A, or it can be also wave 1, or it can be wave A, wave B, and then either you see move the, lower into wave C or wave 3. So
in simple words, what Grega means is that, first of all, this is not the place to be selling in the near term. But second of all, after a rebound, you know, regardless of if this is the first leg of another big move to the downside, there will be opportunity to be selling higher from here, right, Grega?
Yes.
In light of that call, Greg, a long time ago, you had a 107 target in Dixie. I Skyped you and asked you about it. Is that back on the table?
107 on Dixie.
Yeah, remember, I think it was quite some time ago that there was going to be a wave 5 to the upside in the dollar. I'm wondering if, you know, we're in that now.
Yes, it's a quite critical level here. But definitely, I think that these levels can still be seen. I think that there's still a chance for euro dollar to continue lower. I'm just not convinced if high of the euro dollar is already in place for this year, or we are going to see higher prices. But yes, I'm expecting market to continue or to rally into a 5th wave, and actually this could be seen in the next 12 months or so. So definitely I'm still sticking with this longer term bullish view on dollar.
Thank you, buddy.
We have two last questions before we call it a day and a week, Grega. One is for the S&P. Personally, I would also want to see your view as well. I remember that your main case scenario that was last week when we were together here, that there is a higher chance for another push to the downside, and I respect that. I mean, there is a high probability, in my opinion, as well. But you could also see the potential that the correction is over and we're actually pushing higher from here. Personally, for me, it's a little bit opposite than this. I mean, I give it a little bit of a higher chance that the correction is over, but still, I think it's a very close call, so it's not an easy call to make. Has anything changed in that view?
No, actually, it did not, because if we take a look on this price action, we didn't move much for the last 5 days. We are just in consolidation, so I think still that there is coming lower prices either for this wave 2 pullback, or maybe for aggressive decline down in 3 waves for a wave D of a triangle formation. Okay, so for me it's still some kind of a do or die zone. I would not be buying stocks here. I see what DAX is doing. I see what Nikkei is doing. If I take a look,
Nikkei, very nice. Thank you for mentioning it. Nikkei got a very nice rejection. I was mentioning last week the 23,000 level as the do or die level, having to do with the index. We did get rejected from that. Thank you for reminding me, because I forgot to mention it before.
Yes, and actually, I think I mentioned this in one of my past one in the past
webinars.
I
think we had discussed about it together as well. Yeah.
Yes, that we were at 61.8%. We were at this gap. I also have labored here still. So I said that this is potential flat formation, and we could see continuation to the downside. So we have Nikkei turning aggressively lower. We have DAX that turned aggressively to the downside as well. We have 10-year US notes that is turning to the upside. So all this is not healthy risk-on environment. If I want to be positioned on stocks, I want to see all of those markets somehow moving into this same direction. But Nikkei is not anywhere close to the S&P, which is trading somehow around their highs. So I think that there is a chance or risk that stocks will see, US stocks as well, will see a new leg or turn to the downside in maybe next week.
Okay, and the last question that we had before we call it is a question from our friend Sunil about the Nifty. I think that the Nifty has found a short-term high. It's pushed below the horizontal level of 10,600. It's retesting it now. I think we might get rejected from there and get another leg to the downside as an ABC, but I don't know, what's your view? Because on the longer term, this might also be as well like a flat correction, and we might actually push to new lows towards 9,700. So I'm still a little bit torn of what's going to happen to Nifty. I'm bullish in the medium to long term, but in the short term, I'm also a little bit torn. What do you think about it? What's your view? I think we had seen it together some time ago as well. So you must have some type of analysis on it from the previous time we visited it.
Yes, I don't know why it's not here.
On TradingView, if you just type Nifty, it's going to be there.
Yes, I'm just looking if I have some old waveforms here. But it seems we also covered Nifty actually with Blake on Wednesday. So if this person who has a question, maybe it can look at the webinar from Wednesday recording. I've been discussing about this pullback that is unfolding now. I think it's not over yet. I think it can be a wave 4, which can take us back to these supports up right there. What's this? I'm looking for. So this support around there. So I would be looking for a wave C drop here on Nifty. A, B, C, and then turn to the upside.
Yeah, I won't disagree with you. It's a good plausible explanation. The reason being, since it's the last one, let me take the screen to show you what I'm seeing actually. There it is. I'm seeing two things here. First of all, since the initial drop, I had this horizontal level at 9,700 as a very interesting level, and coincidentally or not, if you look at it, if we take the first leg lower and then extend it from the high that we found, the equality target is exactly there, right? You see it, 9,709. So I wouldn't rule out yet the potential for a direct move higher from here if we manage to hold the 61.8, which is also the 200 DMA. But I do see the potential that we might get rejected from 10,600 or a little bit higher. And yeah, I do see the potential that we can even pull back to that area. That's going to be a very nice confluence of supports. But as I said before, and I don't know if you agree with that. Oh yeah, you do actually. You said this is a wave 4. I do think that higher levels are coming to the medium to long term, regardless. So I'm viewing this as a correction.
Yes, I agree. And also short term, here, if we could maybe go to a smaller time frame, I think this is an impulsive decline, and we are now in a minor pullback, maybe even a wave 2. So maybe for short, it can be quite interesting from there.
Yeah, this is the 4-hour chart. Yeah, like an ABC, perhaps finding some resistance towards 10,700 or something like that, and then resuming to the downside.
Yes.
Thank you very much, Gregor. I really appreciate you being here. Okay, thank you, everybody. Coach, will you be closing the webinar?
We don't have a webinar on Monday, is it right?
No, we don't. So everybody, don't forget that. We'll be back on Tuesday.
And have a great weekend, everyone. Don't forget to have antacids ready if you're barbecuing. We don't want you to have indigestion. And we'll be back in action on Tuesday. So have a great weekend, and what a great week. Still encourage you to sign up to ForexAnalytix. You have a long weekend to learn how to navigate the program. The beta test is almost over, and you'll be using the new upgraded version of ForexAnalytix. Also, if you're unsatisfied with your broker and you're looking for tighter spreads or a way to not do FIFO, or maybe have something overseas, Trent is a great guy to talk to. He knows them all. So contact our sponsor at Forest Park FX if you're having a hard time seeing the forest from the park. Trent will guide you. Okay, guys, have a great weekend. I salute all who have served, and remember all who have fallen on this Memorial Day for a cause that they believed in to lay down their lives for. So I know I never had that kind of courage. And so I'm in awe of all our veterans and people that kept us free, no matter what we've morphed into, and most of the world free from what was happening in the 40s. So enjoy the weekend and think of the families that lost people so that we could be gorging on hamburgers and hot dogs and beers on Monday. Okay? See everyone Monday. Enjoy your holiday. See you, team.